Hi, Dave and Andrew. I have a question on how to approach AT&T and their impending spin-off of Warner Media. I started investing in the company before the spin-off announcement and have continued to add to the position because of their large dividend and future promise of free shares of the new Warner Brothers Discovery spin-off company. Here's where I'm struggling. I know the AT&T share price will continue to fall as the spin-off date nears and take a large cut when it actually happens. I can add to the position to maximize the current high dividend and receive more shares of the spinoff company, or keep my position and likely purchase a significantly more amount of AT&T shares after the split while also lowering my overall cost per share, but not receive as many shares of the spinoff company. I'm leaning towards the former because of the increase of the new company and that future value in the long run, but curious what your thoughts are. Thanks, Eric. So this question came from Twitter. So Andrew, what is your thoughts on Eric's great question?
Love it. So let's define spinoff first. It's basically a company that's having a divorce inside of itself. So where it used to be, maybe two businesses merged into one, now they're separating and becoming their own, each their own. So for AT&T, which I'm not an expert on AT&T, I don't own the stock, but I'm familiar with the company. They're spinning off Warner Media, which I don't know, again, the specifics, but I'm assuming I know they have like record labels. They own TV shows like HBO's under Warner Media, I believe.
They are.
So all of those like media assets are going to be what Warner Media is. So it's going to go away from AT&T. It's going to become its own company, separate from AT&T. AT&T with the fiber and the phones and the fancy commercials are going to be their own thing too. And so like Eric said in the question, when that split happens, the share price of AT&T goes down by the amount of how much Warner Media is basically worth, right? So you have the value of Warner Media, the value of AT&T as they split. However valuable Warner Media is gets chopped off that share price. Shareholders who have AT&T shares will get shares of the new Warner Media. You still keep the same number of shares from the AT&T, but you don't get a bunch. I mean, you have the same number of AT&T shares. Now you have new Warner Media shares, but the AT&T is not the old AT&T. So that share price is again going to crash. And so the question for Eric is he's wondering, should I buy more now? You can start collecting dividends now, or should I wait till after the spinoff? And that really depends on which company do you want to own? Which business do you want to own? I mean, do you like Warner Media? And what's hard about spinoffs is that when a company like Warner Media is inside a bigger company like AT&T, there's probably not as much disclosure. You won't see as much information about that company than if it was a standalone company required to file its own annual reports to the SEC. So they're going to have to do that. So moving forward, we're going to get to see much more disclosure on Warner Media that you didn't get to see in the past. Now they do have, I think it's called a S1, but there's special prospectuses for spinoffs. So you do get more detail about what the new spinoff company is, what's inside it, how the spinoff, like the mechanics of the spinoff are going to work. But generally it's not as in-depth as like an annual report will be, which they will file within their first fiscal year of being their own company. So it's tough because you might think you know what Warner Media is all about, but it could be something different. It depends on the spinoff. It depends on the companies involved. And so you really have to keep that into your consideration. Do I feel like I know enough about this business model to feel confident about, yes, I do want Warner Media? And that's really what it comes down to, because I mean, you could play games all day long with the dividends and the stock price, but those aren't games that most people can win. And it's certainly not a game I try to win. It's really, you want to find good businesses and try to invest in those for the long term. And knowing about what a good business is depends on how much you know about the business and how much you know about analyzing businesses. So that's why I say, sure. I mean, if you know for sure you like both companies, why not buy them, collect more dividends? Sure. But if you're kind of on the fence, or you're not, maybe you're a little uncertain about the future Warner Media or what you get with Warner Media, then maybe it's worth waiting until after the split, waiting for more annual reports, that kind of a thing.
So I guess let me play a little bit of a devil's advocate and ask you this. So let's say that AT&T is trading, let's just say it's around $30 a share. I don't know what the actual price is. I don't have it in front of me, but let's say it's trading around $20 a share, and you really like AT&T, but you're a little bit on the fence about Warner Media. If the price drops when the spinoff happens, let's say it drops to $20 a share, you could buy more of AT&T at that time and reduce your cost basis on the AT&T investment, and you're going to get more of the dividend because you own more shares, because that part of it won't change. But
It could though.
it could, but
They could split the dividend in theory, where
they could, but AT&T, that's one of their big trading hallmarks is their dividend. I can't see them doing anything that's going to affect that part of it, because I think that would be ruinous for the investors in the business.
Well, if it's because of the spinoff, so if AT&T was paying $1 in a dividend, but then they spin off, maybe they only pay 80 cents in a dividend, and now Warner Media pays 20 cents of it. You know what I mean?
Yeah.
I mean, I don't invest enough spinoffs to know whether that's the case or not.
Yeah, I don't either.
But sorry, I derailed what you were trying to say. But
I guess
you were saying something about.
I guess what I was getting at, would it be more beneficial to wait until the share price drops to buy more of the parent company? Because you're going to get the shares of the spinoff irregardless. And if you're more bullish about AT&T than you are about Warner Media, wouldn't it be more beneficial in the long run to lower your cost basis? Because then you get, a better return over a longer period of time, because chances are, a company like AT&T will at some point will probably return back to, the price of before the spinoff, probably sooner than later. And then you'll still get the benefit of the dividends that you're collecting because you own more shares.
I think you hit the nail on the head. And there's actually some literature written about it.
Joel Greenblatt,
I don't,
right?
Yeah, Joel Greenblatt. I don't know what the whole cost basis thing is. We're not tax professionals, so that would be more of a special case. But as far as the actual spinoff themselves, Joel Greenblatt, which was an investor who had crazy returns, he did something like 45% a year for like a decade. So in a place where people are happy to make 10% a year, he quadrupled that, and then it mushroomed out of control. So he's done very well for himself in the stock market. He specialized in spinoffs, and he wrote a book about it. You Can Be a Stock Market Genius was one of his books. I think that's the one that has the spinoffs.
I think it is too, yeah.
And he noticed that back when he would invest, spinoffs seemed to always sell off at the beginning. And so he would say, like, the reason for that could be that you have a bunch of people who own the company, and then they spin off a part of the business, and people don't really like that part of the business. So they would sell those shares as soon as they get those shares spun off to them. Or, maybe they bought AT&T because they liked Warner Media, but then, they really never liked the AT&T part that much. So after the spinoff, they sell the AT&T part. You could get a lot of that. And so that's where sometimes you could see the price go down after the spinoff and then come up as people start to recognize that this is a situation that potentially created value for everybody involved. Because another thing about Wall Street, which is kind of weird, but they don't like glut, which you could argue would be a good thing, but like they would sometimes evaluate the pieces differently if it was two separate pieces than if they were together, even though financials are like the same. Different stocks will get different prices based on if you consider them a media company or if you consider them a phone company. It could really change the price. And so as the market figures out what that new price is, that's where you can see it go up a lot. So those are, I guess, some additional things to think about that could be factors. I don't know. I mean, we talked to somebody the other day and they said something about how like the whole Greenblatt thing's pretty much well known now and arbitraged away.
Right.
But I mean, at the end of the day, you still have like investors want to like what they invest in. I mean, if anything, we answered that question today.
Yeah.
Talking about the ethics behind your investing.
Right.
So people do make decisions like that. So it does make sense that you could see prices come down after a spinoff and then go back up. That's completely possible. And it does happen a lot.